What is going on, guys? Good morning. Hope you guys are having a good day here. This is Everyday Growth Advisors with another pre-market live stream. Hope that everything has been fine and dandy on your end. I've been a little busy for the past couple of days, so I wasn't able to hold Monday's live stream, and the reason for that is because we've been launching a new course. Not only that, we have a lot of exciting things that have just been launched, so definitely wanted to take a quick second to announce those things. We now have a 14-day free trial, which is up for grabs with our Wolves subscription. You can sign up for it right away and get into our Discord server and trade live with us during market hours for 14 days. Just for you guys. I wanted you guys to have a taste of what it's like being a part of the team. So head on over to the our website, learncompoundgrow.com, or I'm going to put it in the chat right now, and you'll be able to get access to our Discord channel. Next up is we have just launched a new course, EGA version 3.0. You guys have been hearing me talk about this for a minute now. Comes in two formats. With Discord or without Discord, so you can choose if you want 1 year Discord access with it or without. I sent out a bunch of promotion codes, and so if you want 20% off, you can use the code LAUNCH20 to get 20% off the course signups, or any one of these basically. 7 hours of intense curriculum, which is going to be focusing on getting you up to speed in terms of just bridging the gap between investing and trading. Of course, also it has 4 modules, which are the intro to growth investing, fundamental analysis, technical analysis, and options trading. These all have sub-modules and really, really deep insights on the market. I will be adding periodically to these as well in the future at additionally no cost. So I've poured all of my 10 years of experience into this. And then also, of course, you're going to get trading journal, you'll get DCF valuation Excel sheet, and access to a student Telegram group where you'll be able to pretty much, communicate all your questions directly to me, and also communicate with your classmates. So that's, just something I wanted to announce real quick. Make sure that you guys have everything that you need. But on to the topic of the day, FOMC day, and let's talk about it. It's been a really interesting couple of days in the market. Of course, heading over up to this 40-60 level as what we were talking about for the past couple of sessions. And obviously, it does also look like we could go back up to retest 41.50 and then break out of that at 41.90 if the bulls really get super exuberant. Not to mention, the moving averages have started to kind of converge a little bit. They're crossing over. The 50 moving average is looking like it wants to start, getting bullish and crossing over the 150 and 200. And so we might see a little bit of exuberance here as we head into FOMC. Now, I just sent out a newsletter literally, I want to say 1 hour ago or less than an hour ago. And the summary of what I'm kind of looking at heading into today's meeting is that the market is a little ahead of itself. More importantly, the bond market is looking like it's kind of pricing in or forecasting the probability of a possible further downside on risk assets. The sideways movement so far hasn't really told us much, but then this buy up of bonds so far, chasing those high yields. And then reluctant to buy more ahead of FOMC. As I was saying, in a previous live stream, that the market's going to be a bit reluctant to take on risk in bonds here, not until after FOMC. So we have been watching this development pretty closely, as well as the dollar index, which very promptly rallied yesterday, but then sold off most of today, which has been an interesting development since. So just taking all of these things into account, we've been seeing the NASDAQ pretty much just be the stronger among all of the indices. But more importantly, yesterday IWM broke out of this volume, shelf area plus supply zone for a big takeoff. And one of the reasons for this, we've been continually covering small mid caps being the sectors that will likely be rotated into this year because of how oversold they've been. And we're seeing that, push back in IWM here because of how low it has been compared to the rest of the market. This consolidation is finally coming to an end and starting to move to the upside. Of course, don't forget, we can still get rejected here. This is still a dual zone right here. And so this is that first level that we cleared up here. And then now, it has to clear like 194 or so for it to get back up to 200 and retest this 200 level here, and then it has a lot more room to go after that. So I will be watching small mid caps for the continued rally if possible. Now, in terms of other sectors in the market, semiconductors have been pretty strong. We called out semiconductors bullish right when it started breaking out of the downtrend. Told you guys that it's been entering that boom cycle. The pullback gave a great second opportunity to enter, and now it's obviously back into this dual zone here at around 230-ish, heading up to 240, and then likely to go retest this 240, 250 level up here in the near term. The market is a little exuberant, so a little ahead of itself. So I wouldn't really take overly bullish positions in today's trading session. As I always mention, wait for after the press conference to make any moves at all, guys. Okay, really important. Please don't make any moves before the press conference, because the press conference will come out and it will tell us everything that we need. The priced in expectation of the market right now is 25 basis point rate hike, which is very, very widely communicated already. For those of you that don't know what the current trajectory of rate hikes looks like, I'm going to show it to you really quickly. I actually posted it on the newsletter, so I'm going to pull it up for you guys. So here we go. So the market's currently pricing in, obviously, a 25 basis point rate hike for the meeting today. That will set the upper bound of the federal funds rate at 4.75 and then 4.5 at the lower bound. Market's pricing in about a 4.6, so that's right about there. Then you have the March federal meeting, which the market is pricing in another 25 basis point rate hike, which will leave us at around 4.79. And then you have the May, which they're expecting another 25 basis point rate hike. And then to keep it the same after that in June, keep it the same in Q3, keep it the cut in Q4. That's what the market is pricing in right now. I think that Powell's going to come in today, and he's going to probably say some nasty things that will make this part of the dot plot or the expectation of the market shaky. Okay, this is what the trajectory is right now. But if the Fed says, hey, don't expect any rate cuts in this year, then the market expectation is going to have to adjust in terms of where these expectations are going to be here, the market pricing in here. So these will all go up. And if the back tail of this goes up, then the market, in terms of risk assets, will see readjustment of risk as well. Okay, I will be watching for comments from Powell about how the economy has not stopped slowing, about how he doesn't expect rates to be cut this year, and then lastly, how cutting rates will, cost the economy more in opportunity cost, in the short term. So those will be the keywords that I'll be watching to hear as bear. If he says anything dovish, like we see considerable changes in economic conditions to, warrant a rate cut in the future, which he's not going to say that, I guarantee that. He's definitely not going to say that, that's for sure. But if he says something like that, then we'll probably go straight to 5,000. We'll skip 4,150. We'll just go straight to 5,000 right away. I think that's very improbable that happens. But hey, who knows, man? Who knows, right? There's still, as I was mentioning, a good chance that the market remains bullish, and I don't want to fight the trend at all. Remember that even though I am, slightly pessimistic about how the economic situation is going to play out in terms of market performance. I do think that this year we are going to close higher than where we started, and if that's any consolation, then we need price action to go up. So I'm not going to try and fight this trend that is forming right now. The trend is your friend, and if we are breaking out of this downtrend and we start getting up here above this key bull pivot, then the bull market is very much so back, and there's no point to think otherwise. You just go with what the price action is saying and what the market expectation gets thrown out of the window. So that's what I have in terms of macro update and the Fed day analysis. Now, there are a couple of other things that I wanted to bring to your attention. I put them up on the newsletter. I'm not sure if you guys had a second to have a look at them. Yeah, it's a little, something to kind of jog your imagination. Now, one of the reasons why we don't try to predict where the stock market's going is because when you start looking for ideas, this is what's going to happen, right? So you can see a 2002 chart versus a 2023 chart, which is the dot-com bubble comparison side by side. And you can see how very similar this chart is compared to where we are now. And, it's like when you are looking for those things, you are going to see it. So I just thought it would be interesting to share this correlation in terms of price action. But remember that this market in today's backdrop, it's a very different market in terms of economic uncertainty, what's happening in terms of inflation. That wasn't the case in 2002. And also, remember that this year is the third presidential year. The third presidential year tends to be a bullish year for the stock market. Case in point, this graphic, you can see that the annual index averages for a pre-election year is actually pretty damn good. The NASDAQ tends to outperform. And you can see that midterm years tend to underperform, which was last year, right? So if this year is any consolation, then we should see a big roaring comeback in terms of just historical data, okay? So we'll see. Again, then in election year, obviously, we start to see market give muted returns again. So if last year was, any of a shit show, then this year could be an interesting year for bulls to kind of roar back. And then another interesting thing, which I sent out in the newsletter just an hour ago, was that there's a lot of mixed signals in the market right now. And that's the reason why we don't really try to predict where the market is, right? Our main emphasis should always be to accumulate good shares in good businesses and hold them forever, right? And then avoid your short-term losses in active investments. If you're an options trader, you absolutely have to be careful with times like this, because this is the times when you can lose a lot of money. So you have to be really careful, okay? On top of that, you have insider transaction ratios, which have been pretty high at this point, right? If you compare, just year over year, obviously January tends to be a time when, majority of the market gets bullish. But insider transactions in terms of selling has been at a pretty high record right now. So that's just another thing I wanted to bring to your attention. Apart from that, honestly, pointless to try and trade this chop. I'll probably be sitting out. It's been a pretty intense 1 to 2 weeks for me. So I'll be trading very lightly until FOMC. After FOMC, if I can catch a bit of volatility, I might take it. Here's some setups that I'm watching. Tesla, for a possible rejection and then a run down. If it goes back up to retest 180, then I'll be looking for a double top rejection here on the 1 hour for that pullback move back into this mean trend line. So kind of for it to come back to this trend line and kind of normalize here. I don't think that will happen today, but hey, you know what? You never know. Okay, so I'll be watching either for the 180 rejection or for it to kind of lose this low over here at 162.50. Right now, I won't touch it. The risk-reward ratio is terrible on either side, so I won't be looking at a trade to take now. I'll be looking at to take it either above 180, rejection of 180, or a below 162. Those will be the three key pivots for Tesla today that I'll be watching. So 180 rejection, if I can confirm on the 15-minute chart with either a pin bar or any kind of a topping out pattern or a slowdown with maybe a doji with the bearish engulfing, I'll take that. And then if it kind of continues its reversal down to the downside, then I'll probably get out by 161.90 and let the vultures kind of take that, because the range is already formed here. We could chop between the range and then go sideways. But if we do break below 161.90, then that's going to probably send us back down for a possible retest of this gap fill at 146. So I'll be watching those key levels on Tesla today. With NVIDIA, a little bit of a 15-minute little head and shoulder action going on, but then I don't really like that setup that much. However, I will be looking for this opportunity to short this or go long, either way. Either a pullback into 191.50, this would be a key level for me today to watch, or a breakout out of 197 even, and then kind of catapult up into 203 from there for this gap fill here. If it rejects here, then the risk off level would be 197.55. Take a short trade only at the break of 189 to the downside, because anything else here will be choppy, and I don't want to pretty much try to guess this. Good morning, here to learn how to play Fed Days. Hey Johnny, what's up, man? Welcome into the live stream. If this is your first time here, make sure you go ahead, hit that like button and subscribe. But if this is your first day here, go ahead, ask any questions you want, and also if you want me to break down any chart, I can do that for you. You might have turned up just a little bit late. I just went through a whole bunch of stuff in terms of SPX, NASDAQ, and what my plan was for the day, which actually, it's not much of a plan. It's just sit out until you see the Fed news, but I was kind of going through the macro backdrop and what the expectations of the market are versus reality. Next up is, let's see here, Apple Fapple has been interesting. This trend line has been pretty much keeping it pegged down, but yesterday it actually started to use the trend line as a little bit of a support. Now I wonder, obviously this is going to kind of follow through with SPX in terms of price action. But if we get that rejection and it continues heading downward, then Apple Fapple will be an easy plan to trade the plan move. If we can get a break below 142.22 today, that will send us down back into 138. So I'll be looking for that entry if I can get that short position around that level. This would be the plan here. I'll go risk off like around, just slightly above this. I would say around here. And then take this whole downside for a possible play. So around, I would say this is probably about right of a setup. If you can get that break, this short trade plan. Now, of course, with the short trade plan comes a long trade plan. So long trade plan would be hopefully a pullback move and then a bounce to get that 147. That would be the move that I'll be looking for. Always informative. Hey Preston, long time no see, man. I hope you're doing good. It's been a very long time since I've seen you. Or have you been just lurking in the shadows? Nice to see you, man. And welcome back. I appreciate you, with the good vibes. Then you have Microsoft. This one's been interesting. Falling wedge pattern on a very big time frame. But you know what? It's still pretty bullish compared to most. I think it got rejected last week and then gapped down after earnings, but has been very strong after earnings. If you guys can see, after earnings it came down but bought up right away, like roaringly. So Microsoft has been bullish. I don't want to fight the trend with this. Which indicator is that, and do they have it on TDA? Which indicator are you talking about? Let's see. Indicator. Which one? I'm not using any indicator actually. Oh, you're talking about this one. Oh, the short position. It's on TradingView. I don't think they have it on TD Ameritrade. They have it on TradingView though. It's called short position, long position. You can use it here. It's like under the, you'll see trend lines, then Gann and Fibonacci, then geometric shapes, text, and then it's the one that says prediction and measurement tools. It's an easy way to just measure your stuff. Lurking and learning, love it. Rich, I'm gonna get to yours in just a second. Okay, so Microsoft, honestly, I don't wanna play this setup right now. Don't like the risk to reward ratio odds here, and then it could break up here and then reject and then come back down for a fake out. I will only play this one if it really heavily rejects this level for that downside. So I don't like the Microsoft play just here. Amazon, broken out of the downtrend, and I don't know if you guys remember me saying, but consumer discretionary has been a weak sector for this year. So I think I'm looking forward to it being a strong sector. Sorry, it was a weak sector last year. So I'm looking forward to it being a strong sector this year. And you know, stocks like Tesla and Amazon should come back at some point. So I will be looking to trade these to the upside. Amazon has a big gap fill here, by the way, which I think everybody is aware of. But you know, don't play into it too much. People like to they always like to focus on gap fills, but remember the gaps don't always have to fill. What I would like to see is a break above 104 with really good volume and momentum. If we can get some really nice big candlesticks, I would play this to the upside. You know, playing up to the 110 makes sense. So that's a decent setup here. If you realize, I tend to stick with the mega caps. The things that I really love to trade are the mega caps, and I stick to the safe things. I don't like to play risky stocks. Things that are below 10 billion market cap, don't even talk to me about it. I will not trade them. It's just pointless. Lululemon, another one that's been in a nice little wedge. Looking for the trend line on this bottom to kind of bounce. Hopefully we can get this in the next couple of days. Also watching Baba. It got rejected pretty heavily in the supply zone. This is a exhaustion gap for those of you that have taken the technical analysis course. So for those of you that are not aware of what gaps what gap types are, this is a exhaustion gap right here, and we already hit our target here. Why is this still here? So we played Baba pretty violently to the upside. We caught most of this move, and we'll be looking to take the pullback move if we can, you know, confirm that we'll actually get a little bit of a sell-off. So, but however, I'm still bullish on Chinese stocks for the short term, so I don't want to play this overly to the short side. Just saying. All right, let me do rich now. Okay, Chevron, CVX, right? Yeah, it is CVX. You said own most of mine under 157. Do you see it holding here around 173? I want to add more, but not chase over 180. Okay, so pretty intense sell-off. Damn, what happened? What the heck is this? Oh, earnings. Okay, the surprise. Did they have bad earnings? How is that even possible? I thought anything in energy sector would just turn to gold. That's weird. Okay. So I think a smart way to approach this. Okay, wait, hold on. Let me get rid of this first. Let me get rid of all my drawings actually. I want to start fresh here. Okay, so you have, okay, so this is a new dual zone right here. This was a previous demand zone. That's too far away for us to care about it. This is another demand zone around here, and this is now the zone that is in question. Okay, so let's have a look at what's going on with this here. Okay, so you are within the dual zone. This is a possible, so you can see how this was a previous resistance, right? You had a little bit of a peak out here. This is exuberance, but then this becomes a support zone now. Okay, so here's the plan. The plan is this. You don't touch this, but what you can do as this is coming down, right? You can sell a cash secure put. I think that adding with cash secure puts at 167, 168 is a good idea here. So if anything, you have your cost averaged at around 157. You would not be averaging up too aggressively. So when it starts to get down into like 167 or 160, let's just say 170, right? When it starts to get down to 170, if it does get there, you can start selling cash secure puts. Actually, if it gets down to 171, you can already start selling cash secure puts, to be honest. The IVs on this should be pretty attractive to do so. Sell cash secure puts and collect premium. If you don't want to collect premium, then just outright buy the shares around this area, I guess. You could add a little bit to your position here. And then later on, you know, you can add more as, you know, you get further confirmation. If you want to wait, ultimately, then you have to see what Chevron does at 167-ish, because this is the key pivot here. And then if you do break below this level, then you can obviously wait a little longer to add shares. But that's the way I would play it. I would just keep selling cash secure puts till I get assigned around this area. That's the way I would do it. Earnings at one time quirk in Q4. I'm not concerned. Okay, gotcha. Costco. Got it. Brandon, got you. Let's do it. Okay, so Costco was in a very nice pennant as of late. And it broke Wow, this one's been like on the wild fake out, right? Okay, let's see. Let us see here. Okay, hold on one second. Let me just get this right. Okay, so it is now moved from being independent into a wedge. All right, let's just call it. Let's just call this a wedge. Okay. Okay, so we need to make some adjustments here. Ooh, this is tough. This is a tough one to trade right now. Okay, these are major pivots here. Get rid of this one. This is major pivot to the upside. This is major pivot to the downside. Anything in between is going to be a little choppy. So let's go into a smaller time frame here. Okay, so a little bit of inverse kind of pattern going on. Okay, so I think that above 51250, this is not a bad spot actually. So above 51250, we could see some upside action, further upside action, but it's gonna kind of test this upper trend line that's kind of been forcing and pegging it downward. But I think that you know what, the trend line's not been super aggressive in terms of forcing it down. As we saw, it did break the trend line a couple times and do its own thing. So I think above 512, it starts to get a little more bullish. But hold on one second. Let me just check the volume here and see where the volume profiles are, so to give you a better idea here. Here we go. Okay, so let's pull this a little further back in terms of the layers and just look at this area right here. Okay. Let's see. So this was a major point of control, and let's see where the point of control improves here. Okay, so this is obviously a little bit of an improvement. So above 512, it likely goes back to retest 523. This is a key pivot here with Costco. I would watch out for the 523 pivot. This is going to be an obvious one. And then after that is 530 up there. So, you know, I think volume really cuts through this area pretty easily. So I would be careful there. Yeah, I would say bullish above 512, 513. Try to play it to the upside only if you get confirmation. That's what I would do. If it rejects here, or here, then the downside it is after that. So watch out for that. You need to plan for both. Don't just plan for the upside. Plan for the downside too. That would be my 2 cents. I hope that was helpful, Brandon. Okie dokie. 2 minutes to the open. Not really going to be much of a crazy open today. For those of you that missed the announcement, just want to mention, since there's more of you here, we have a 14-day free trial on the Discord right now. I put the link up there. This is the link. I'm gonna put it in once again. You can join the Discord for 14 days free right now. I've set up a free trial for you guys. So if you wanted access to that, you can go to this link and then look under the Wolf subscription. You'll see 14 days free trial. It's to the premium access, so you'll be able to trade with me live for 14 days if you want to just take advantage of that and see if it's a fit for you. And then if you want to stay on after that, of course, entirely up to you. But I just want to tell you guys, we have the free trial. And then on top of that, we have a new course that is launched, EGA version 3.0. Since there's more people here, I thought I should tell you guys. And more details about that can also be found on the same website. Go under the course page. And I'll also probably talk about it more on Friday's live stream. Today's live stream is a little bit of a rush to talk about it. But hey, on your way out, if you appreciated the stream, I'd really appreciate if you can just throw us a like, you know, or a subscribe if this is your first time here. But we'll see you back on Friday for another pre-market live stream. I hope that you have a great trading day. Remember, do not trade until after the presser. The press conference is going to be the more important thing. So stay away from putting on risk until after the press conference, because Jerome Powell can say anything and set your portfolio ablaze. All right, guys. Peace out. Have a good one. Love you guys. Peace. Bye.